What's going on, guys? My name is Jeffrey Rodriguez, and in today's video I'm going to be showing you guys an in-depth breakdown of exactly how I break down my charts. Real quick, guys, make sure if you're not already subscribed to the channel that you hit that subscribe button right below this video, as well as turn on your post notifications. That way you're notified every single time I post a video. Alright guys, so in today's video I'm going to go start to finish from the monthly down to the 1 hour time frame and show you guys exactly how I mark up my charts and what I look for when I'm going to be executing a trade. Alright guys, so let's go ahead and get right into it. So we are looking at NZD USD on the monthly time frame, and no specific reason, I just chose NZD USD because this is one of the pairs that I don't have marked up yet for the coming week. So I'm going to go ahead and mark it up with you guys. So I always start from the monthly time frame and I identify the nearest support and the nearest resistance levels. So currently I see that the market is really just consolidating in this area between this high here and these lows down here. So I'll go ahead and I'll mark this level out here as support, and I'm going to use the nearest low. Alright, so the low of this candle is 67.80. So I'm going to go ahead and do 67.80, copy that and paste it. And anytime that I'm marking up my charts, I make sure to always check off what time frame I'm using. So for this example, we're marking up the monthly, so I make sure to have all time frames turned on. And I'll show you guys what I mean by this as we're dropping into the lower time frames. So I'm just going to set this to 8 hours because sometimes I do go to the 8 hour chart and everything's set for that. And I keep my support levels blue and I keep my resistance levels red. Alright, so this is the consolidation that we're in now. I'll change this to red, and the high for this candle is 0.75580. So we'll mark that out. And also this is a near-term resistance level as well. 74359. Copy this. Alright, and the reason I marked out these two highs here is because these are the nearest monthly highs. So if the market does start to trade higher, I will be expecting this high to get ran out and then ultimately this high here. And those will be these are the nearest levels of liquidity in the market, and this is the nearest low. So if we take a look, again, we are just consolidating, but we have formed a lower high here. So we have a high, a low, which broke lower than these lows. Then we came back up and we formed a lower high. So I'm expecting a lower low to form. So just a very typical bearish price action. This is just on a monthly basis. So we always start with the higher time frame and work to the lower time frames. So this is all that I'm expecting. I'm just expecting a continuation lower. All right, and the way that I get to that analysis is simply by looking what is the market structure that we're currently in. So we have a high, low that broke lower than these lows, traded back up, lower high. Now we're expecting continuation lower. So now that we have our levels marked up on the monthly chart, I'm going to drop down into the weekly chart. Now if we look on the weekly, we can identify that we do have a bullish ICT order block, which is this down candle here. As this up candle broke above it, any retest of that should act as support. So we have just traded into that so far, and we have started to push up. So we will keep this outlined. If we do break below this, obviously we are expecting that lower low, but since we're looking at a weekly time frame, we can get a little bit more dialed into price action, and we can form a few more ideas. So since we are traded into this support on a weekly basis, one idea that we could see is find some support, trade back up into these up candles here before the market broke down, which is an ICT bearish order block, and then we could potentially see the market start to sell off from there. Now, this is the reason I always start with a higher time frame, because I want to get as dialed in the price action as I possibly can. So I don't keep that on my chart. That's just an idea of a potential scenario that we could see unfold. So on the weekly, I don't see anything other than this. We can go ahead and mark out this low right here because this is a potential objective that the market could trade back up into. So the low is 71532. Okay, so we got this low marked out at 71532, and that is a potential scenario that we could see the market trade up into there. So I don't see anything else for the weekly that we need to mark out that is within the current range that we're trading in. So we'll go ahead and drop down to a daily. Now looking at the daily, we can see that yesterday's candle did close higher than this down candle. So on a daily basis, we do have this as an ICT bullish order block. So again, the market on lower time frames so far is showing an upcoming potential retracement because we do have some bullish price action forming on the daily. And we know that by seeing this up candle here close higher than this down candle. So we could retest this high and then we could see the market start to trade higher. So we could just simply trade in and then start to push up from there. So these are all things that I keep in mind as I'm marking up my charts. Now I'm not going to go ahead and outline this just because I do know that it's already within that weekly ICT bullish order block. But what I will do is I'll mark out the high of this candle with a blue support line. And then I'll also mark up the open as well with a blue support line. So I'll adjust my prices. The high is 69376. And then the open is 68966. Okay. All right, now I forgot to do this on the weekly, so let's go ahead and make sure we do this. Like I said, as I'm moving down time frames, what I do is I change the visibility. So for this ICT bullish order block, it's on a weekly time frame, so I make sure I uncheck monthly, and I just want it to show on the weekly, the daily, the hourly, and the minute charts. All right, so that's set up. Now this, I need to make sure that I uncheck monthly, and then we can drop down into the daily, and we've just marked up these two daily support levels. So we're going to uncheck weekly and monthly because we only want this to show on the daily and lower because the level starts on the daily. Now if we go back to the weekly, we'll see that those levels aren't on here, but they'll show from the daily down to the 4-hour and lower, so we can have them mapped out. So anything else that I see on the daily, I don't see anything else that we should be concerned for. There is this ICT bearish order block here, but if the market is going to push higher, I would expect them to break this here. This ICT bullish order block on a 4-hour basis right here, that's also within the weekly and the daily. So this could be a potential retracement opportunity. Now, I'm not going to go ahead and mark this out because I can just watch the charts as they're trading into it, and I like to keep my charts as clean as possible. But what I can do is mark out potential target levels. So if we do enter the trade based on these daily support levels that we've drawn out, well, we're going to need to have targets set. So my targets are going to be the nearest swing highs, which are going to be the most recent levels of resistance. All right, guys, so now we've got our target levels marked out, and I'll explain why I marked these levels specifically. So let's go ahead and we'll adjust the price levels. So the reason I chose these highs here is because this is the most recent swing high here. We have a high with two candles beside it that closed lower. So we're going to expect the market to run the liquidity here. For anybody that sold the market on this move, they more than likely have their stop loss above here. So any trade, if we did buy it here, let's map this out with our arrows for the potential idea. We could see the market trade into this level here or anywhere within this 4-hour block, this daily open here, this daily high. It could be any of these levels. And then the market start to push higher and hit our take profit levels. So this will be take profit 1, take profit 2. You can have your take profit 3 here, but I think if it's going to come all the way up here, then we're more than likely going to run this high here. That's why I just went ahead and marked this instead of this one. But if you want, you can mark out each one specifically. So you'll have this high next. And then you'll have this high here. So this would be all of the levels I'd be looking for. This would be my first level, second level, third level, fourth, and fifth. And as the market trades to each level, I would scale off a portion. So for example, if I have one standard lot that I bought here at this blue line, as the market traded up here, I would take 0.2 off, so I'd have a remaining 0.8. I would take 0.2 off here, and I'd have a remaining 0.6. Take 0.2 off here, have a remaining 0.4. take 0.2 off here, have a remaining 0.2, and then take 0.2 off here and have nothing left. So this will be my full objective achieved. And at each portion, I would scale a little bit of my trade off. So for example, we would have first take profit, 45 pips, second take profit, 55 pips, third, 89, fourth, 100, fifth, 110. So within that whole move, we can scale off portions and we can be paying ourselves along the way as we're trailing our stop loss. So this is generally exactly how I mark up my charts. I mark up everything down to the 4-hour like this, and that's where I'm going to be looking to enter off of. So I have my levels where I'd look to buy the market. So this would be one, this would be another, potentially in here. So as the market's trading in there, I would buy it, and then my stop loss would go below this low here because this is the most recent swing low. From here, I would drop down into a 1-hour time frame. And as the market is trading on a 1-hour time frame, what I would be looking for the market to trade down into some level of support. So that could be this ICT bullish order block here. And I'll know where it starts to find support because what I can do is I'll drop down to about a 15-minute time frame. And the market will likely form a candle like this. And then the next candle will be a bullish candle. And that'll usually signify that there's some sort of support forming. And you could typically buy on the next candle, or you can wait for structure to break and then buy on a retest. Whatever the most comfortable entry pattern for you is, then that's what you would use. But I have everything marked up of where I'm looking to buy and where I'm looking to exit on the 4-hour. And then from there, I'm just waiting on an hourly basis for the market to trade into those levels. Once I do see the market trade into those levels, I'll drop into a 15-minute time frame. I'm waiting for it to prove to me that it's found some level of support, and then I'll buy it or sell it if I'm looking for the market to trade into resistance. So just as an example, if the market continues to trade lower, I would have this level marked out. If the market trades right into it and then there's a 15-minute candle that pushes up and forms bullish right above it, typically that would indicate that there's some level of support formed here based off this ICT bullish order block. And then we can look for either a retest and then go long, or if we miss the move here, we can wait for a retest of structure, which would be here, and then we could buy it there and then go long. It's just whatever you're most comfortable with. Or if the market's trading into it and you want to buy it as it trades right into it, you could buy it there as well. It's just whatever you guys are most comfortable with. So again, guys, I have everything marked up on my charts from a monthly down to a 4-hour basis. The 4-hour indicates the levels I'm looking to buy or sell at, as well as my exit points and where my stop loss placement would be. So from there, I would drop down to a 1-hour time frame, and this is actually where I would do my entering. So I would enter based off of, when the market is trading on an hourly or a lower time frame than this. Typically, it's either the hourly, 30-minute, or 15-minute. I usually don't go lower than a 15-minute time frame, but I find myself trading off of the hourly and 30-minute most. So this is what I'd be waiting for. Alright guys, so that's it for today's video. I hope this made a lot of sense to you guys and helped the people that are struggling with actually marking up their charts and what they're looking for. If you guys enjoyed this video, make sure to leave a thumbs up. And I'm also curious, guys, what platform do you use to mark up your charts? Is it MetaTrader? Is it TradingView? So comment below, which platform do you use to mark up your charts? TradingView, MetaTrader, or is it something else? So that's it for today's video, guys. Hope you enjoyed, and I'll see you on the next one.
After this track, I might need me some lozenges. I ain't about to go soft. This rapping shit lately been pissing me off. Guess these words are kinda just at the tip of my tongue. But I'm still young and I hope I find the rhymes that'll live through time before that fat lady has sung. Cause when I'm inside this booth, feels like I rule the world. But I'll hop off my horse, hop in your Porsche, give it